Thanks for joining us. Hey, D.
Good morning, Will. So
it was a rough start, everyone. I have to apologize. This power issue has really moved into my internet and cable this morning and led to some issues. So with that, you got anything for us this morning, D? Let me get the disclaimer up actually real quick.
Let's get the disclaimer up and then we'll start. So really quickly, this disclaimer, everybody, Will and I, MarketChameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need a professional advisor, then go seek out either a registered investment advisor or call your broker for any questions. Again, there's the disclaimer really quickly. We'll go back. So let's just come back to the pre-market report. Well, do you see that?
Yeah, it looks good.
Market. All right. And as usual, we'll start out the pre-market, look at some earnings coming out in the next 2 weeks, see what the options are implying. If we have enough time, we started a little bit later today because of that power issue, but maybe I'll go to like an options chain and look at how to look. Maybe we'll use Apple as an example at some options in Apple, seeing how they're valued. So again, this is the pre-market report. If you guys are joining us for the first time, it's stocks that are trading in the pre-market hours before the market opens. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. As I just go usually right up to the top of the list here to see what's moving. And here we have ANPC, that's up 110% on 2.2 million shares in the morning. This is a small cap stock, and I'm looking at the news here. And again, this is a stock that had some news related to the COVID-19. Looks like they're making a test for COVID-19. And we've been seeing this in the last 2 weeks. A lot of times these small cap biotech stocks have been popping. Any news related to COVID. I don't know, now I'm getting interested just to see, compiling that data and seeing how these stocks actually tended to perform after, coming out week, 2 weeks as I'm watching this kind of replay. KZI, that's up 81% on 2.6 million shares. That market cap is 4.2 million. Again, these are small cap stocks. That's why they could pop really quickly on. They probably have low floats. A lot of people like to play in those, but usually you'll see these as the top percentage gainers just because they're like these small cap stocks. I see Zillow, that reported earnings. We were talking about Zillow yesterday. Prior to earnings, that's up 14.3% on 124,000 shares trading in the pre-market hours. That reported earnings. Groupon also, look at that, up 37%. Well, that reported earnings as well. What?
That's amazing.
That's amazing. Yeah, like Groupon. I almost forgot about that company, and all of a sudden, yeah, it just popped up in the morning, up 37%. I guess and that's still kind of a small cap stock, right? 466 million market cap there. They reported earnings, surprised everybody, so up 37%. So let's just take a look. Actually, maybe we'll take a look at. We'll start from the top one and just analyze it from price action perspective. So this is that biotech stock, ANPC. We see here, this is the news on it. I'm not going to open up the news and interpret it. I'm just going to look at just the price activity, and I'll let you decide, read that news and interpret that. So we see the stock, 52-week range, $5, $12.18. Right now it's $11.12. That's up 102% in the pre-market hours on 2.6 million shares. In the pre-market, it's traded between $7.33, $14.79, very wide range. It looks like a very liquid stock. Again, be careful, guys. We're just looking at it from the perspective of what's going on in this stock in the pre-market hours. We see here largest VWAP bar trading in between $11.18, $11.69 on 1 million shares. let's just take a look. That's the minute to minute standard deviation, 68 cents. So you could see they're very, very liquid, moving around a lot. I'm going to go look up the gap history in this stock just to see how today's gap compares to historical gaps. So this is in the last 3 years, the 12 largest gap moves in the stock. So we see here, these are the 12 largest gap moves in the stock. These are the dates, press releases, if it had any that day, if the market moved higher. So the average gap to the upside has been 12.5%. So we could see here, this is way above. It hasn't seen that in the last 3 years, 102%. So something is very different. Obviously, they have this news on that COVID test, but just to see what it tended to do after large gap moves, we see here that, the average move from the open to the high has been 1.6%. From the open to the low, it's been 9.8%. From the open to the close of the day, 83% of the time, it drifted lower for an average loss of 6.4%. Again, this is very small cap stock. That's how it's performed in the past. So let's look at also, since Groupon and Zillow, let's take a look at Zillow really quickly. So Zillow, we know that reported earnings up 14.4% right now in the pre-market hours, 148,000 shares trading in a pre-market. That long bar, VWAP bar between $80.95 to $81.08 on 43,000 shares. Let's see from a historical earnings perspective what it tended to do. So this is the last 12 quarters of earnings. So we see here on the opening gap, 55% of the time it was higher, 45% lower. That's the average of the gap moves, negative 0.6%. We see in absolute terms, which is the magnitude of the move to the upside or downside, on average has been 11.3% with a high move of 20.2%, which is this one, that was to the downside. But on average, 11.3% move in either direction at the opening bell. So today, 14.4%, that's above its 12-quarter average. We see for the entire day, the absolute average move has been 12.1%. So it looks to me like after the opening, it continued to stretch a little bit further. Instead of closing that gap, it stretched a little bit further, because if you waited till the end of the day and you held that straddle, the move was a little bit more, almost 0.7% more from the previous days. Here, from the open to the high of the day on earnings, its average move has been 6%. From the open to the low, the average move 4.3%. From the open to the close of the day, the average move has been 1.5% gain. 55% of the time from the open to close, it was higher, 45% lower. So about like 50-50 on that Zillow. Let's take a look. Let's go really quickly to earning, unless you're having any questions on this report in specific. I'm going to just go skip to what's coming out for earnings.
Ahmed just asked a question. Something we maybe can discuss in the options basic webinar Monday. He's just asking you to define VWAP, what it means.
So the VWAP is the volume weighted average price. So that's where kind of a lot of professionals look at it. So any one price, you could have a last price here at $11.54, but if 100 shares traded at $11.54 and the bulk of it, hundreds of thousands of shares are trading at $11.10. So that $11.54 doesn't have as much weight, even though it's the last price, only 100 shares say traded. So what the VWAP does is it multiplies the price versus the volume of the trade. So it's a volume weighted average price, right? So think of it this way. That's not the average price, but the volume weighted average price, which a lot of institutions use as benchmarks, especially those institutions that enter in VWAP orders throughout the day. So that's where professionals will start looking at VWAPs. You could look at a day VWAP, a minute VWAP, 5-minute VWAP, so whatever you want to do. But usually traders will reference VWAP prices, not just last price. Hopefully that helps. Maybe if not,
yeah, no, that's good.
Whole thing on it. Let's take a look at what's coming up for earnings next 2 weeks. And let's take a look at, these are stocks. We're going to look at it from a perspective of the options markets and what the options are predicting the earnings move to be. And let's do maybe market cap of 5 billion. And so what I'm screening for here is market cap above 5 billion, stocks that are expected to report earnings in the next 2 weeks. And that stock has to trade on average 10,000 option contracts per day. The reason we're doing it is because we're looking at the option straddle to see an option straddle. You're buying a call, buying a put on the same strike, and we're seeing what the markets are predicting to move to be in either direction, up or down. We're looking at magnitude of move. So here we see, here's CGC that popped up. That's coming up next week, August 10th, before the market opens. As of yesterday's close, the markets were predicting an up or down move of 13.7%. That compares to a 4-quarter average move in absolute terms of 15.5%. So we see that today's implied that's 1.9% below the average, and the 12-quarter average move of 13.9%. So that's almost in line, a little bit under negative 0.3% below the 12-quarter average, with the high move in the last 12 quarters of 30.4%. Another one we see, NIO. I think we've talked about this one. That one was mentioned on the show before. What is that, Will?
It's an electric car company out of China. It's had big moves around Tesla years ago. But
sure. I'm just going to bring up so here's the 52-week range from $1.19, $16.44. So let's just see how. So that's been going up in sympathy with Tesla. Is that correct?
And Nikola. It's the whole electric car play. I mean, nothing's been like Tesla, but for early on in its storied history, it moved in interesting movements relative to Tesla.
So this one. So let's take a look at this one. NIO. That's expected to report August 11th before the market opens. As of yesterday's close, that straddle was predicting 18% move in either direction. That compares to a 4-quarter historical average move of 24.6 after earnings, and a 12-quarter average move of 18.2%. So you could see that's 6.5% below the 4-quarter average, in line, minus 0.2% below that 12-quarter average move. High move was 53.7%. So this is, again, smaller cap stock had really high moves, really big percentage moves in this NIO. Cisco coming out August 12th after the market close. That's expecting a move of 5.9%. That's kind of in line with its 4-quarter average move of 6.4%, a little bit below 0.5%, and a little bit above its 12-quarter average move of 5%, 0.9% above that. High move in the last 12 quarters, 8.6%. So that's really quickly going through the different earnings that are coming out in the next 2 weeks. What I was going to do, if you have any questions, I'll go over those. And maybe if not, I was going to go maybe to the Apple options chain.
Yeah, well, we did have a question about GM. I'm trying to get clarification on what he wanted, but his question was, he wanted you, I guess, to look at maybe the earnings or take a look at GM.
Okay. So here's General Motors. That's, let's just take a look at let's just take a look at its trading, kind of its activity compared
Looks
to
like
the
earnings
market.
already came out on the 29th.
Okay, so I see here in the last 6 months, 1 year, it's been way out underperforming the rest of the market. 6 months it's down 21% versus the market. Right now it's actually up almost 1%, 0.9%. In a 1 year basis, market's up 18.2%, GM's down 29%. Obviously it's underperforming the rest of the market. In the last month, it's continued to underperform 3.5% versus the market's 5.5%. 2 week, looks kind of weak there. So at least on a relative performance, not that great from trading activity. Let me just see the sentiment coming in right now. At least in the very short term, the options have been betting bullish. Stock, the big money flow, when we're tracking those big block trades, they've been, at least in the short term, looking more bullish. So basically they're stepping up that activity. That's from General Motors, but I see they've already reported earnings, so we'll see. But I think General Motors is actually working on a lot of technologies as well, like electrical cars, hydrogen technology, stuff like that.
Tesla's forcing every car company to rethink their model.
Be innovative, yeah. So that's right now General Motor. That's how General Motors leaks from a really quick analysis, unless he has a specific question.
No, that's good. That was great.
Okay. Any more questions?
I think that's it right now.
All right. I was going to do one thing because I do get some of these questions. I'm going to go to the Apple options chain really quickly. So here's Apple options chain. Let's pick out, something like September 18th. So 30 days out. And one of the things sometimes when you're looking at these options, you want to just get a quick scan on, are these options, how richly are they priced in terms of premium? Are the premiums low today, high? How did they compare? And when we're talking about, I'm going to show an example using an option pricing model. But remember, when we're comparing, or when we want to take a look at this option price, 271, 291, and we want to get a sense of how richly priced is this premium, there's no one right method to evaluate it. There's just different ways you could look at it with different parameters. And what I mean, like, people ask, well, what do you mean, Dmitry? So before I do this really quickly, I'll explain. Like, let's say you were looking at a piece of real estate, right? And you wanted to evaluate how much is this home worth? Well, you could take different approaches. One way you could say, well, I think the average price per square foot is $200. This is 1,000 square feet, so this home is worth $200,000 to me, right? That's one way to evaluate. Another way to evaluate is like, hey, this is a rental. You know what? I could rent it, get $30,000 a year. I put a 10 cap or whatever you do, right? Well, like,
yep,
10% return. So that's worth $300,000 to me. That's a different way to look at evaluation. Another way you could do it is look at the interior and say, hey, this house, even though it's more expensive, but they built exactly the pool that I want. They have a backup generator. They did all these renovations. So even though everything is saying everybody else is 200,000, this house is worth 250,000. So there's different ways to evaluate things based on the parameters you want to apply. That's my point. So having said that, let's take a look at these options over here, and we see here are the options. These are the call options on this side. These are the put options on this side. So let's just run a theoretical value in between. This is the bid and the offer for each call. This is the bid and offer for each put. This theoretical value I could control. So right now it's just kind of set to a best fit regression line based on the implieds. But so we know that what are options? They're priced off volatility. The more volatility in the stock, the higher the probability those options go into money, the higher they'll be priced. The lower volatility, the less likely these options will be in the money, the lower they'll be priced. So think of it this way. If you start at zero volatility, that means the stock will not move from today's price. So all these options will be at parity. There's no premium in them. Let's assume, if we take the Black-Scholes model, let's assume, what if Apple moved based on the same volatility as its historical 20 days? So we're going to assume, what are these options worth if the volatility, we don't know what obviously nobody knows what the volatility will be in the future, but if we make an assumption that we think it'll be right around where the last 20-day volatility was. So that's what I'm going to check off here. What if the stock moves at the same volatility it did in the last 20 days? Now it's going to rerun. So these are the prices according to the Black-Scholes binomial model. This is what this option will be worth based on 20-day volatility. So we see here today, the stock, the option, like take the 535 call, which is 17.7% away, right? According to the model, if we run that 20-day historical vol, this option's worth 82 cents. Right now it's 345, 380. Again, that looks richly priced based on that assumption. Let's say I'm like, you know what, maybe in the last 20 days, it didn't move as high as volatility. What if I take the 1-year average? You know, let's just do that and see what these would be worth. So I'm going to take the last year and say my best guess is the volatility will revert in the next 30 days right around the historical 1-year average. Click that, press OK. What is going on? All right, so here we go. So here, I forget which one we're looking at. So this one. So here, these are a little bit better. That's saying that here, the 530, theoretically, that would be worth $2.49. Today, we see that is 380, 410. Again, that's a little bit more richly priced than if we just assume that's the volatility that the stock will move at in the next 30 days. We could also put our own assumption in and say, well, what if, you know, whatever you want to put a custom one in, or we could just do a mix. Say, what if it's the average between the 20-day, which we look at the more recent volatility. So maybe the more recent volatility is a better indicator, right? And then it reverts to historical volatility. So we'll take the average of the two, 20-day and 1 year. And now let's see where that shows up. Now we can kind of see that under all these scenarios, you know, these options, 380, 410, again, look richly priced compared to the historical volatility that Apple has been moving. Now you have to kind of also just take into consideration any type of news or anything going on with Apple. I know it's been like really breaking out to the upside and making some big percentage moves. So anything else you want to put in there, then you'd have to compensate. But those are like just benchmarks to start looking at how far away they are from a historical volatility mean. Another way to look at it is, what if I didn't use them? So one thing to think about the model is the model assumes that you're trading the stock according to the way the model is structured, that you're trading delta neutral, right? That you're hedging your options and hedging your option deltas with the stock, with the underlying stock. What if we did a different assumption and said, what would this option be worth? I don't care about the volatility, but what would it be worth if, you know, we did no hedges, we did nothing, and this is 30 days out. So what if I bought an option, whatever this is, that's 23.2% away from the spot price and held it for 30 days? What is the average end value of that option? So I'm taking that. So that's the only assumption I'm doing. I'm not re-hedging stuff. I'm not doing any of the gamma of it, you know, nothing what the models tell me. I'm just if I bought that option. So here we're going to use 4 years of data, 4 years historical, and see what that looks like. So that's going to rerun. So here we go. So that's what the options. So these will be already zero. So that's what the average end value is, assuming no hedges, you know, no delta gamma, nothing. You bought the option held it for 30 days, 12.2% away. That was the average end value. So this is quick way to start. Like I gave you, the real estate is a quick way to start looking at the options using different assumptions, different parameters, just to see where today's prices are based on, historical means.
Awesome job, Dima.
Everybody.
Awesome.
Yep. And thank you for joining us. Sorry about today's, late start.
A little bit of a late start. Listen, I put out a link for Monday's webinar Options 101 with Dmitry. We're going to start from the basics, putting calls for anyone who's interested. I'll put that link right now in the chat. Remember to like us and give us a thumbs up and subscribe on YouTube. And with that, you guys have a great weekend. Any last words, Dima?
No, thanks everybody for joining us. Thanks for all the questions. Have a great trading day. We really appreciate your support, and hopefully we see you guys Monday.
We'll see you Monday, everyone. Have a safe weekend and a safe trading day today. Bye.
Thanks, everyone.